We're just over 15 minutes into the Tuesday trading session. Stocks are positive. Let's head to New York, check in with Kriti Gupta on some of the U.S. market themes. And Kriti, we were talking about the S&P moving back towards this 3,000 level, having closed above that level since early March. And if we keep marching along at this rate, wouldn't be too long to get there. At the end of the day, I don't know if that's a psychological level, but it is kind of rarefied territory. So it is a talking point this morning.
Absolutely. Stocks really kind of making their way up there, grinding higher. You're not seeing those major moves to the upside that you saw maybe a few weeks ago with the volatility. You're seeing volatility kind of calm down a little bit and still stocks gaining higher. That's actually a very good sign for a recovery in the stock market. Once again, you mentioned that that 3,000 point level, very crucial because that round number, yes, it may be psychological, but it's something that may indicate, okay, well, maybe we're in the clear now. We've crossed that kind of record 3,000 level. What's important to note, though, is that a lot of these kind of stock gains are coming off these hopes that the economy is going to reopen. A lot of these comments coming from President Trump himself, saying that he's partnering with retailers, with state governments to kind of reopen the economy, widen testing. That's where you're seeing a lot of this optimism happen. The really important thing to note is, can these stock gains hold as we see the economy actually reopen, as opposed to just gaining on the sentiment itself?
So that's some helpful context. I mean, it's kind of curious when you're trying to make decisions on which company is more affected than another. Caterpillar's in the headlines today. As I look at that stock, looks like it's navigating okay today. And yet when you look at what they did in the first quarter, which was obviously challenged by COVID-19, and now they're talking about more potential challenges ahead in the second quarter, it's not like things are looking all that optimistic when it comes to making money this year.
That's right. I think Caterpillar is a great stock to look at because it's one of those global bellwether stocks, a real proxy for how the global economy is doing. And like you mentioned, they didn't have a fantastic first quarter, a lot of that driven by kind of that slump in energy. Remember, this is a maker of heavy equipment. So to see a slump in energy really does impact their business. And you are seeing that show up in their numbers today as well. But remember, Caterpillar is kind of the same idea that we've been talking about. There seems to be a divergence between what the stock market is showing, what the underlying economy is showing. So you may actually see these stocks gain despite withdrawing guidance, despite suspending production. But it's really kind of this idea that, okay, well, yes, we do know the first quarter is bad. We do know the second quarter may show where the virus is peaking. But okay, let's look ahead to the future, to potentially the back half of 2020. Nevertheless, you are seeing Caterpillar say that the rest of 2020 could be a challenge year as well. So it really looks like for companies like Caterpillar, those heavy equipment businesses, it's really a 2021 story.
By comparison, a company like Pepsi might be seen as one of those, stay-at-home stocks. Not exactly Netflix, but I mean, we're all eating the goodies a little bit more than we often do. Just give us a sense on what they're saying. I mean, how is their business performing right now? They had their earnings out.
That's right. Pepsi, I got to say I'm guilty of myself, really kind of stocking up on those Pepsi treats. What you want to keep in mind, though, this is, of course, one of those stocks, like you said, that is thriving a little bit off this kind of pandemic idea. But the CEO made it very clear today in his earnings call that this isn't just the trends that you're seeing picking up. You're not just seeing kind of stockpiling. That may have been the initial boost that you saw in their kind of snacking divisions. But you're also seeing kind of bumps in just continuous spending. So people are actually eating the snacks, not just stockpiling them, storing them aside. That's actually very good news for Pepsi. And you're also seeing Pepsi really work on its kind of distribution network. You're seeing them partner with Bang Energy. They're now the exclusive U.S. distributor. That announcement was made this morning. They've also partnered with some other beverage companies as well to really kind of extend that distribution network. That is something that Pepsi is very well known for. Nevertheless, you are seeing them say they have a very strong balance sheet, plenty of ample liquidity. But really caught my eye here is that Pepsi is actually sticking to its 2020 plan of kind of sticking with their buybacks and their dividends plan. This is kind of coming in a time where we're seeing a lot of earnings, a lot of companies roll out and say, well, you know what, we need to cut back on our spending. We need to freeze executive pay, for example. We saw that in Caterpillar. Pepsi, not so much. They're saying, you know what, we're strong. We are still going to go ahead with our 2020 plans and issue the cash back to shareholders. So something to watch there. Pepsi can really hold on to that.
Kriti, thanks a lot for the update. As always, that's Kriti Gupta with Bloomberg News in New York with the latest on some of the U.S. stocks. And we're still about a month away until